What's up, you guys? Welcome back to the channel. For those of you who are new, my name is Evan and I make videos about hot stocks, dividends, and options. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now in today's video, we're going to be taking a look at if NIO is still a buy and a few factors that could kind of give you more of an idea of whether you should continue buying NIO and if they're really worth the share price that they're trading at right now. But before we jump into that, taking a look at NIO's share price today, they're down almost 6% at 5.4% down in the red. And they started this morning in pre-market pretty neutral. And then within about an hour of the market being opened, they dropped down to about 10% in the red. And now you can see they're right around that 5 to 6% in the red today. And I would assume that they're probably going to end the day in the red today. Now typically NIO does start low and they end the day a bit higher than they started. So they could end in the green. But at least recently, in the last week or so, we've actually seen NIO trade pretty flat, which is pretty uncommon for NIO, at least when we look at the last few months. Especially the last month or month and a half, we've seen NIO pretty much shoot up exponentially, and there wasn't really any signs of slowing down. So even though they've been trading pretty flat in the last week or so, it's not really a bad thing to see. And it's actually good to see NIO have these red days. And it's good to see them have red days when the overall market is down as well. Because if we actually compare NIO to the overall market, here I have SPY pulled up, you can see they're down almost 1%. And SPY started just barely in the red pre-market, and then they kind of dipped down through most of the trading day so far. And now in the last hour or so, it looks like they're starting to climb back up. But they're probably going to end in the red, as SPY doesn't usually make big leaps, and they usually trade relatively flat most days. Now they do have 1 and 2% gains, but they're likely going to continue trading pretty flat. And to see them in the red, as well as NIO, it's not really a bad thing for NIO investors to see NIO actually following the overall market. Because a lot of times NIO has a mind of their own, and they'll go up when the market's down, and vice versa as well. So to see NIO tracking along with the overall market, I think is a good thing to see. But to get a little more in-depth on NIO, here I have 10 days worth of NIO pulled up. And you can see obviously right now they're trading right around that $51 area. But I've actually put two horizontal lines on here, both representing some support and resistance. Now, obviously, both of them right now are resistance because NIO is trading below that. And you can see the first one is at $52.23, right around that $52.20 area. And if we look in the past, we can see that this has been an area of support and resistance in the past. Now, it's mostly been support, and it's been a pretty strong support line over the last 10 days. And so once NIO can get above that, if they can get above that today, then we should see NIO continue above 52 through the rest of the week. Now, obviously, the next resistance point would be right around $54, which is the next resistance line here. And you can see, again, this was mostly resistance, although it was support a couple times in the last 10 days. It's been mostly resistance. And so if NIO can break above that $54 mark, and especially if they can do that this week, we could see them hit a new all-time high. Because obviously the next resistance would be at $57, which was their all-time high so far. And for those of you who aren't signed up for Webull, that's what I'm actually using right now. It gives you a lot more in-depth tools, and you can really look at the analytical side of stocks, and it can really help you trade more in depth as compared to a brokerage like Robinhood. So if you guys haven't signed up for Webull, you can actually sign up using my link in the description, and you'll get 4 free stocks when you sign up and deposit $100. Now, the only reason I'm really showing you guys this Webull trading platform is because it's free, so it's just like Robinhood in that aspect. But you get way more tools to help you dive deeper into your research on these stocks, and it can really help you decide easier when you want to pull the trigger on buying stocks or options. So again, if you guys haven't signed up, when you use my link, you get 4 free stocks after you deposit $100. But now transitioning more over to the research side of things in terms of NIO and whether they're still a buy, we're going to look at a few things and a few factors that could kind of give you an idea of where NIO could be and whether they are still a buy where they're trading right now. So these are the things we're going to be taking a look at, and you guys can pause it and read these if you want to. But these 12 things are what makes up the NASDAQ dozen. And this isn't the most complete or the best way to approach investing, but it does give you an idea and a good starting spot, especially for those who are newer to trading stocks and you really don't know where to start your research. These are a few good things to look at before you buy into a stock. And the main concept of the NASDAQ dozen method is the more passing scores you get, it gives you a better idea and more confidence that you can invest in that company. And on the other hand, if a company fails at more steps than they pass, it might require more research and you might not have as much confidence going into a stock like that. So the first thing is revenue, and you get a passing score if your revenue is increasing. Now we know that NIO reported revenue of $1.123 billion in 2019. Now if we compare that to 2018, they had a revenue of $721 million, and so they would have a passing score in this aspect. And I believe by the end of 2020, when revenue comes out for NIO, for the entire year of 2020, we're probably going to see even above that 1.1 billion. So they would get a passing score for 2020 as well, which is a good thing to see. The next thing is earnings per share, and you get a passing score if the earnings are increasing. But NIO actually has losses over the past 2 consecutive years, so they would receive a failing score for earnings per share. Now, in terms of return on equity, you get a passing score if the ROE has been increasing for 2 consecutive years. And because NIO is not profitable, and they weren't profitable in 2019 or 18, they would receive a failing score for this as well. And they're likely going to continue receiving a failing score on the return on equity for the coming years as well, until they break a profit. Now it's anticipated that NIO is going to break into the profits by 2022, so they would receive a failing score on this for the next 2 years. Now, according to analyst recommendations, NIO would get a passing score because we know a lot of these analysts have been putting out price predictions for NIO, and a lot of them have actually been upgrading from a hold to a buy or from a sell to a hold. And right now, I would say the majority of analysts have a buy rating on NIO. So it's pretty obvious that NIO would receive a passing score on analyst recommendations. Now for earnings surprises, you get a passing score if your earnings per share surprises during the past 4 quarters have all been positive. And it says that this is not the case thanks to one earnings miss in the past 4 quarters. So NIO would receive a failing score for this step. Now, in terms of forecasted growth, the consensus for earnings per share for 2020 for NIO is negative 73 cents, and for 2021, it's going to be 61 cents, which is just an estimate, obviously, but NIO would receive a passing score because obviously negative 61 cents is better than negative 73 cents. Now we only have a handful of steps to go, and the next one is actually growth in earnings, but this one actually isn't applicable to NIO because they just went public in 2018, so there's not enough history to support this step and to actually give them growth in earnings. So they don't receive a fail or a pass on this section. But now for their PEG ratio, you get a passing score if your value is less than 1. And this is the only score related to valuation, where the majority of the other scores are rated on analyst ratings and revenue and things like that. But for NIO stock, due to the fact that the company is unprofitable, there's not a defined PEG ratio, and so they would receive a failing score. Now that would make sense that they would fail this because they're not profitable yet, but I would almost give them a neutral score here and not give them a pass or a fail. Because again, they've only been around since 2018, so it's kind of hard to give them a strike on this one and say that they failed it. But I'm just saying, with them being around for so little of time, only being on the market for 2 years, I would almost kind of give them a neutral rating on this one. Now, in terms of earnings in the industry, you get a passing score if your company has a PE ratio that is higher than the industry earnings. Now, according to CSI Market Financial Analysis, the auto and truck manufacturing industry has a current trailing 12-month PE ratio of 37.78 for the third quarter of 2020. Now again, NIO is not profitable, so they receive a failing score. But looking at these things that NIO fails because they're not profitable yet, I think those should almost be excluded from the total just because of the fact that NIO is so new. And if we actually use these same steps in the next 2 or 3 years, NIO would obviously be looking a lot better because it would pass more of these steps. But moving on to the 10th step is days to cover. And if you don't know what this is, it says that days to cover is the number of days based on the average trading volume of the stock that it would take all short sellers to cover their short positions. And according to the most recent data on MarketBeat, they show that the days to cover figure for NIO stock is just under 1. So they would get a passing score here. And number 11 is insider trading, and you get a passing score if the net activity for the past 3 months has been positive. And there's no data currently available for insider trading, so they don't get a pass or a fail for this step either. Now, in terms of weighted alpha, you get a passing score if the number is positive, And the weighted alpha is a measure of the 1-year growth with an emphasis on the most recent price activity. And for NIO, obviously with their 1-year growth of over 2,000%, they get a passing score on this one. So in total, NIO received 5 points for passing and 5 points for failing. And they also received 2 points that were neutral and were neither a pass or a fail because of insufficient data. So this really isn't super surprising given the fact that NIO is relatively new and they're not into the profit margins yet. And so with the way NIO has been scored so far, with these 5 passing points and 5 failing points, it kind of points to the fact that NIO is overvalued and that you should kind of proceed with caution when investing in NIO. But if you know anything about a market like the EV market, we know that they're going to be huge in the future. And we know that in China especially, by the year 2035, they want to get rid of gas-powered vehicles. And so the only means of transportation would really be electric vehicles. Now, if you also consider the fact that California is doing a similar thing by 2035, we could definitely see other states and other countries doing the same thing as well. And it wouldn't be surprising to see electric vehicles take over the vehicle space. And then we should see electric vehicle stocks pretty much skyrocket. So even though scoring NIO, they only have 5 passing points, you have to look at this as more long term. Now, sure, when we look at this method, you should proceed with caution, and you certainly should with any stock you're investing in, and you should definitely do your own research. But just looking at the electric vehicle sector and what they're going to be in the future, all these companies are going to be way bigger than they are right now. And I think a lot of investors would not hesitate to agree with that. Now, for those of you who made it this far into the video, I want to hear what your guys' predictions are for NIO by the year 2025. Now, I know I've asked you guys end of year predictions. A lot of you guys have said around $70 by the end of the year, but I want to hear what you guys think NIO is going to hit by the end of 2025. So in the next 4 to 5 years, where do you think NIO is going to be in terms of their share price? Lastly, if you guys haven't signed up for Webull, make sure you guys sign up and deposit $100 to get your 4 free stocks. Also, if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.